to another episode. So the comment section are again open. Last week's comments have been answered. The first chart I'll pull up today is that of UK crude oil, that is Brent crude. I'd asked for all of you to start tracking this chart because this is a clear reflection of any potential either resolution to the global conflict or if the situation accentuates, so that is gets worse. See, the problem with media and social media is that there are always unverified reports about what is happening. So this is a direct metrics or a direct data point that will tell you what is currently happening in the world. So you hear reports as though US is winning, and then you hear reports Iran is winning. So all this biased kind of reporting that happens, obviously we don't have privilege to inside information. This will get reflected on the charts of crude. As of now, if you look at crude price, it is approaching the first major pivot, that is of June 24, about 88. Then there are a series of pivots here: 88, 92, 93, 96, 99. And all this can be hit given what is happening. At least that is what crude chart is telling you. For our markets, I'll come to that in a bit. Nothing largely has changed. We remain in a very poor environment. Last week, I could not do an update, but I had updated about the market on my Twitter handle. I'd written a detailed update about what was happening in the world. I hope you read it. But if you look at our markets, nothing basically has changed at all. We remain in a very poor kind of breadth environment. Now Nifty 500 breadth is down to 30%, I think 29%, 29.8%. That is only 29% stocks are above 200 DMA. In such an environment, you cannot hope that things are going to be okay. And remember a key rule that I've been repeating in my videos, that is of William O'Neill: in poor market breadth environment, even leaders randomly start selling off. So PSU banks, Bank Nifty, you look at metals, a lot of pockets have sold off. Some energy related pockets that I've alerted you about, that is CPSE index, that has held up very well. You've also seen today defense index giving a stage 2 breakout. This is nothing but a stage 2 breakout. In volatile environment, you cannot commit a lot of money. The easiest way to participate in these things is SIP or systematic trading plan. Again, that is not a recommendation. Anything that I speak about in this video is not a recommendation to invest or trade. Please consult a SEBI registered investment advisor. So this is a proper Stan Weinstein stage 2 structure. Nice bit of consolidation has happened over 50 DMA, many months, and then a final breakout is happening within an environment where defense again is coming into the limelight. See, I've been super bullish on defense space because the world is moving towards that. A lot of things are changing in the world, and you just cannot ignore it. And there is it's above our pay grade essentially to even understand what is happening, the kind of movements that are happening globally, why certain countries are doing certain things. That is something that we cannot understand. But defense is a theme that is coming out now. You look at what has happened in UAE. UAE essentially was defenseless. Don't you think after whatever is going on is over, these countries are also going to come together and now create their own defense kind of umbrella? They're going to procure weapons from somewhere. That is why I'm telling you, defense is a big theme in the world. It is not going to go away so soon. Whether it is maritime, whether it is air defense, whether it is land defense equipments, whether it is countering drones, all this is going to blow up in the next 10-15 years. And historically, if you see post World War One, World War Two, we had a period of 80 odd years where world was relatively quiet. The world started changing post 2001. I think 9/11, post 9/11, a lot of things started changing, and now we are post 2015, 16, or maybe 2012 also, we are again in an era of global disturbance, and this is just not going to go away. In our particular case also, we are not blessed with great neighbors. All right, so there will always be provocation that is going to happen, which is why I appreciate what is happening in our country with respect to defense. Because defense, once you strengthen your defense forces, that is the biggest deterrent for nuisance creators. And India, unfortunately, now has 2-3 nuisance creators around it. So India needs to be betting big on defense. And I hope whatever central and state government is distributing in terms of freebies, also at least some of it, bring it back to defense, bring it back to artificial intelligence. India needs this. It's the need of the hour. I know it's easier said than done because we have a very complicated country in terms of size, in terms of population. I completely get it. But there are certain things I don't want to say. I hope you also understand. But it's the need of the hour that India has to be self-reliant in defense. Else, it will get difficult in many years ahead. Now, coming to our market, Nifty FPI 150, this is an index There's a newly launched index, I think 150 top stocks, where foreign institutional investors, for them specifically, this index has been designed. At least that is what I read. Somebody had sent a detailed article also about it. I could not read about it, but I think based on free float, these are the top 150 companies. Again, look at the structure, not great. And mostly these are FII kind of companies, where first when FIIs come to India, they're not looking at your micro caps. They're of course looking at the top 100, 200, 300 kind of companies. You also take a look at Nifty 500 index. Again, nothing great, just nothing great. I had a hypothesis that March, April will, be a period where the markets would start rallying again, especially after this kind of retracement that the market would go through. But now structurally, some things are definitely changing. I just don't like how oil is moving, because oil is something that will disrupt the economy of India, that is going to disrupt the economy of China, that is going to impact Saudi Arabia. The Straits of Hormuz, in fact, is a pivotal point. And I just don't trust any president or somebody saying they are going to escort all the ships out of that region. That is just something that is not going to happen. So don't pin your hopes on that. Now, if you come to sectoral ETFs and what has technically moved this week has been really good for defense, CPSC, PSC. So this is where a lot of strength was there. It's not been that bad for metals also. In general, banks have also held up well. But again, the problem area of the market remains the broader market. If you look at small cap index, micro cap index, all these are struggling big time. Look at, this is mid cap, small cap 400 index. You look at small cap 250, again a new low. So this pocket of the market is not going to improve anytime soon. It is not going to improve anytime soon. Because yes, our macros are fantastic. I won't deny that. But now the macros will also come into the question. Imagine you being Reserve Bank of India. Now you will start thinking, what is the new average that the oil is going to quote at from 6 months from now, 12 months from now? The updates from US and Israel is that in the next 3-4 weeks, things are going to settle down. You know what? I don't believe it. I won't believe it because I was listening to an interview by General G.D. Bakshi, and he summed up the entire situation beautifully. He said in his interview that Iran knows they are not a match for US and Israel. But then he quoted, and I'll use one Urdu phrase that he said because that is how he said it. He said there is a phrase in Urdu that is, "Hum to doobenge sanam, tumko saath leke doobenge." For those who don't understand, it means if I'm going to drown, I'm going to take you down with me. And I have not heard anybody summarizing the situation today as beautifully as General G.D. Bakshi did. Because in this particular case, if you look at what is happening with respect to Israel and US and Iran, US has nothing to gain out of it. Yes, they want to control global energy, but that is not going to happen. It's not going to happen because there will be a time where other countries, and you're also hearing this from smaller countries today, who are standing up and telling America whatever they are doing is not good for the world. Coming back to the point, America in general, if you have read Ray Dalio's book, How Empires Collapse, this is precisely how empires collapse. Because they start getting into mindless and needless conflicts when their economy is already struggling. Look at the debt to GDP of US, and still they are doing what they are doing. So the large kind of thing that is played out here is between Israel and Iran. America has gotten involved. Iran, of course, has nothing to lose. Nothing to lose, as in they are being attacked from all fronts. And a regime that has lasted for 40, 50, 60 years is not going to give up so easily. You might have wiped out the leadership, but they're not going to give up. That is what General Bakshi was speaking about, and it makes a lot of sense. Israel, on the other hand, has dragged America into a war, all right, which they say they are going to kind of accomplish their mission in 3 weeks. I don't believe that. I don't know that because frankly, none of us know what is going on. That is why I am relying only on the chart of crude oil to understand what is currently happening. And the chart is currently not in a good structure, which tells me that, still there are problems out there which we don't know about. So let's say we get a massive candle here and then a long wick and strong rejection on the downside, then I think equity markets will start moving up. But will it be a time for you to start investing or trading actively? No. And for this, you will again have to go back to my previous video. Understand one thing, this is 50 DMA, price is way below it. This is 200 DMA. Price is way below it and below the 200 DMA pivot. Such environment is never great. It is only great for what? That I explained in last week's video, that if you are going to get tremendous volatility in Nifty and Nifty is going to hit these levels, pick up ETFs. That is the only thing I'm doing, picking up ETFs whenever I see massive volatility in the market, because ETFs for me are next few years kind of bet. It is not next 2 3 months. Next 2 3 months, nobody knows what is happening. The structure is telling you what is the structure. It is lower high, lower low. Structure is telling you that things are not great. So you have to listen to what the market is suggesting at this moment. What would make the structure sound if we consolidate a lot? Meanwhile, the breadth of the market improves, price heads above 200 DMA, preferably above a small base, and the breadth improvement happens, then you can start accumulating for relatively shorter term return. By relatively shorter term return, I mean a duration of, let's say, 6 to 18 or 12 months or 14 months. Short term, I don't do. For those who are new to this channel, I don't do this BTST, buy this week, sell tomorrow. No, that is all garbage. Please don't get into all that. So the structures are just not good. There is one more index I wanted to showcase, which is India VIX. India VIX is, again, some markings I have done. Previous times it has peaked at this level, some more bit to go. Only COVID and 2008 is when we have seen some real massive kind of a volatility playing out when it comes to this thing, VIX. So VIX, last time COVID peaked at 80, 85. I think for 2008 financial crisis, it peaked out at 68 or 72. Back then, VIX index was not there. There was another index that was being used. Currently, we are at 21. Again, at 21, if you're a super long-term investor, ETF deployment through SIP, wonderful. But if you're a short-term trader, even from a 6 to 12 month horizon, be careful, because you don't know what peak is in the market. If crude is going to go beyond 90, 95, 100, 110, equity markets all over the world are going to head lower. And India, mind you, is a rank underperformer when it comes to equity market. We have the worst performing market currently, really poor relative strength, no breadth at all. Yes, there are some pockets, some stocks that will always do well. If you're a master stock picker, you should continue doing that. If you're not someone who knows how to pick needles from haystack, that is my category. I don't know how to pick needles from haystack. I would simply deploy money when I see lot of volatility in ETF, and I'll sit quietly, wait for structures to improve, so that I have taken advantage of lot of volatility in the market. There are a lot of gaps in the market. There is one gap here also. Who knows this level is not coming? That is my point. So don't, are our macros really good? Macros are wonderful, but market is still not ready to move up. Broader market is not moving up. In recent times, post Iran and Israel conflict, US Iran Israel conflict, you've seen gold, silver also started correcting sharply. Artificial intelligence theme is correcting. Then in certain pockets, you started seeing Korean markets correcting, Taiwanese market correcting. Why? Because this is where money is. This is where people have made returns. So India that way is relatively okay, because nobody has made any returns in September 2024. And currently, if you look at India valuation, I think forward 1 year it is trading at 22 times or 23 times. The band for India is 12 to 26 times or 12 to 30 times, I think. So we are not exactly cheap. We are not exactly expensive. Is there a room for correction? Yes, but that will depend on crude and global charts. If you look at the chart of Dow Jones and S&P 500, we are still not correcting that much. Markets are holding up very well, which is great. Which is great for the world, because you have to also understand that in this particular conflict, currently it is not US that is going to bear the brunt of whatever is happening. It is mostly the emerging market countries. More importantly, if you look at emerging market index, look at the sharp correction in emerging market, flip the chart, look at S&P 500, it is just not corrected. Why? Because emerging markets currently are more exposed to energy shock. The cost of energy. The cost of energy is what is pinching, and that will pinch emerging markets, including India, going ahead. So through Straits of Hormuz, China gets 40% of its supply. India gets, I think, 35-40%. 60-80% of Saudi Arabia's exports happen through that channel. Iran is now attacking all the Gulf countries. You don't know what is the spillover effect of that, right? There was an image that GCC countries had, fantastic countries. You go to those countries like Dubai, Abu Dhabi, Oman, Qatar, beautiful. I mean, infrastructure, the kind of safety. That image is being questioned. Understand that. And everything in life is about perception. You remember when Operation Sindoor happened? Our army smoked the hell out of our neighbors, but yet online you were seeing that the perception battle about what was going on was being won by other side. Why? Because our spokespersons were just not aggressive enough to put out information because they are so professional. But in our case, we were dealing with people who don't understand basic things also. If you argue with an idiot, you are the idiot, right? So it's all about perception. If GCC countries, the perception that they have in the eyes of investors, in the eyes of FPIs, that starts getting, shaken, then it will have ripple effects across Asia. So Asia, emerging markets in general are highly susceptible to what is happening today, as opposed to the markets of US or other countries. It's not that Europe is not getting affected. Even Europe will get affected because China will get affected. So I don't know what is going to happen in this. All I would tell you is that whenever the markets start trading below 200 DMA, be careful. Be an investor. Be a slow, gradual. If you see 10-20% waterfall decline, deploy more money in ETF. But don't try to bottom fish stocks because you never know what is bottom in the market. You have to adapt to whatever data is coming out and don't look for forward looking statements. I was like you, going through social media, television, a lot of people saying buy the dip. Below 200 DMA, don't buy the dip. If you are a few years kind of investor, definitely ETF 1%, 2%, 5%, deploy your money. But don't put in a lot of money unless and until you see proper structures forming on the chart. This is something I had alerted on Twitter when the trade deal was also announced, that the structure of the market is so broken, don't go behind that hype. And all our indices, everything has retraced back. So this is where I had made that particular tweet. Don't chase this market because the structures are just not good. Breadth is so poor. Again, William O'Neill's key rule: when the breadth of the market is poor, randomly the market will sell off. And what he has spoken about one more rule: if there is no global disturbance, that sell off usually stops at 7 to 8% below 200 DMA. But if there is global disturbance, you never know. So when he gives a range of 4 to 7%, understand he was also an analyst, a brilliant one. So he gives range for you to work with. So I don't know personally what is happening, in the world in terms of the crisis as well. Only crude oil chart tells me all is not well yet. So unless and until I start seeing stability, you look at the weekly time frame chart of crude oil. This is a huge base that is getting formed. Can it be something similar to this? God knows. I don't know. It can also turn out to be this kind of a base where move was about 100%. So with this base 60, 100% move would be what, 120. All markets will crack big time. The previous base when it formed, price moved from 60 to again 140, again 100% move. So crude has a tendency to do wild things when the base gets triggered. And this is the risk to India, to China, to Saudi Arabia, all Southeast Asian economies. Put all Asian economies, emerging markets, everybody is at risk. So, in a way, if America gets what it wants, it is going to control now another energy asset. It has relatively more to lose also. Look at the candle, weekly candle that is forming. If we are supposed to close this way, of course, I'm recording this Indian Standard Time 4:30. US market still has to open. This candle can come back to 82, 81 also. I don't know that. But this candle, gap, long tail, if it closes like this, super bullish. Steve Nissen, candlestick charts, this is super bullish. So once this congestion zone is taken out, God knows what is going to happen. So keep your analytical kind of data points simple. Don't look for thousands of opinions. Keep tracking UK oil to see what is happening. As of today, the candle that is getting printed, UK oil is not doing well at all, which tells you that globally still people are not sure in which direction things are moving. Don't trust social media. Don't trust media. Don't trust handles on X. Nobody knows nothing. They try to pretend they have some insider information, some source somewhere. That is load of BS, nothing else. Trust what is going on in UK oil chart or US oil chart or even our crude mini or whatever you track. That is going to tell you way before their sources of what is truly happening. All right. So be safe. Have a great weekend ahead. Take care. I'll see you next week.